Okay, welcome to the ICT course. Through these videos, I'm going to be teaching you the fundamentals of ICT concepts and how you can use them to become a profitable trader. But before I teach you from my perspective, I have to give credit to ICT himself for the concepts that he's taught about. So if you want a deeper understanding of raw ICT content, then definitely check out his channel. But this first video is going to be on all the basics you need to know about fair value gaps. So a fair value gap, or FVG, consists of three candles where there is a visible gap between the wick of the first candle and the wick of the third candle, as you can see here. So you've got the first candle here, third candle here, there's a clear gap between the wicks. Again, first candle here, third candle here, gap between the wicks. The bullish FVG is called BISI, which stands for buy side imbalance and sell side inefficiency, which means there's an imbalance of buyers compared to the sellers. So there's more buyers than sellers, and so there's an inefficiency in sellers. And then the bearish FVG is called SIBI, sell side imbalance, buy side inefficiency, which is the opposite, where there's more sellers than buyers. Okay, sorry to interrupt, but I'll try and make it quick and useful. I've started a premium Discord group if you do want to accelerate your trading journey, and I've got a few different options that, depending on where you are in that journey, you can take. So firstly, I've got a monthly mentorship where I do weekly calls, give you my trading setups, as well as support from me and a strong community of determined traders for just $5 a month. I've also got a complete SMC course with everything that you need to know in one place, as well as the strategies that I trade on funded accounts with proven results. And also comes with a free 30-minute meeting to accelerate your trading journey and fix any issues you have. And then finally, if you want a more personal approach, then I have a few spots for one-to-one mentorship with monthly or more regular calls and unlimited, pretty much 24/7 access to me. Any questions you have, just send them my way, as well as a tailored learning path that I will create for you to get you profitable. So thank you for listening to that. Definitely check out if you're interested in any of those options, and let's get back to the video. So the market often returns to this area, the FVG, before continuing its move during efficient price action, and so FVGs can be used for entries, with the most simple entry just being from the start of the FVG, just so that you don't miss any trades that only tap into it briefly. Another entry is consequent encroachment, which is the 50% level of the FVG, the equilibrium, and it's used by ICT traders because the FVG is said to have been filled once the 50% level has been hit. And then you can also use more complicated entries, such as an order block or breaker block that's lined up with the FVG as an entry point, which I'll explain in the next slide. But then finally, FVGs can also be used as a point of interest for lower time frame confirmation. So as you can see here, there's a line drawn at this order block, the last consecutive bearish candles before the move up, and it also lines up pretty much nicely with the 50% level of the FVG. So whatever entry you took, from the start of the FVG, from the 50%, or from the more advanced order block entry, you would have got tapped into the trade, and then it continued upwards. And this is kind of what you're looking for. Inversion FVGs are also used by ICT traders, and it uses a past FVG in the opposite direction as an entry area. So a bullish inversion FVG is valid once price closes above a past bearish FVG, and a bearish inversion FVG is valid once price closes below a past bullish FVG. As you can see in these line drawings here, you've got bearish FVG, price breaks through it, closes above it, and now it can be used as support. Whereas here, you've got a bullish FVG, price breaks below it, closes below it, and now it can be used as a resistance area. So this is an example where the inversion FVG showed support. You got your bearish FVG, price closed above it, broke through, returned to it, used as support, and took off. And there's also a bullish FVG here. You can see here, it's huge FVG between these candles, and an order block here. So this was a high probability setup that I did take, and I actually sent it to my free Discord group. But thank you for watching this video. Hope you liked it. The next video will be on order blocks, so I'll get that out soon. So stay tuned for that. But yeah, thanks for watching. See you in the next one.